Hi, this is Alessio. Hope you're well. So as I'm sure you're aware, just recently the Federal Reserve made a decision to cut interest rates by half a percentage point after having raised it for some time and after having kept it steady for some time. So it's quite an important move by the Federal Reserve, but the question you're probably wondering is, okay, well, what does it mean for the stock market? Could this be a negative factor for the major stock markets, or could it be a positive factor or bullish factor for the stock markets? And in fact, I'm going to explain to you the significance of this chart and this data you're seeing here and what it means for the markets in the next several months, especially as we're getting closer to the end of this year. All right, guys? So it should be quite an interesting video. Join me. Alright guys, welcome back. So this is a very interesting period for the stock market. I'm going to dig into the charts in just a few minutes. And of course, in this video, I'm going to discuss the recent decision by the Federal Reserve to cut rates after having raised them. Plus also I'll explain the meaning of this chart as well. Before we do that though, let me first of all do a quick summary and recap. You may remember in my previous video on the 7th of September, I mentioned that when this drop occurred, when this big drop occurred in the stock market, because it hit support on this trendline support, and also because we reached oversold conditions on the RSI, I established some long positions in the markets expecting a bounce, because after such oversold conditions, a bounce in the market is quite likely. And of course, in the same video on the 7th of September, here's what I said about my thoughts on this pullback that occurred in September, and let me play for you what I also said in the members video on the 8th of September. A lot of the data at the moment, especially data from analyst Jason Geppert, seems to favor the bullish perspective. In other words, the data from Jason Geppert at the moment, the majority of them, seems to favor a breakout to the upside. In other words, above the August highs. Okay, just letting you know that. And also, I'm using the current drop in the stock market that's happening here to accumulate a bit more. So I'm adding to my position based on the most recent drop that is occurring here. My higher probability expectation at the moment, because the majority of the data, the majority of the statistics are pointing for a further advance, for a further continuation of the uptrend to higher levels, for example, to 5,800, 5,850 in the next several months, I'm going to give the market the benefit of the doubt that this drop here is a temporary correction, a temporary pullback. In other words, after this major rally we had here, again, it's to be expected that we would have some kind of a pullback or correction. So for me, this drop here is a temporary pullback, okay, before we then continue the uptrend to higher levels. Alright guys, as you heard there in those two clips, I mentioned on the 7th of September that I was using this pullback that occurred here in early September as an opportunity to establish a bit more long positions. So essentially I was accumulating, adding to my positions here when this pullback occurred. And in fact, in the members video on the 8th of September, again, I mentioned that I considered this to be a pullback, a temporary pullback before we continue higher again, expecting new highs in the stock market. Now I should say, I was not expecting this rally to occur so quickly and so forcefully, but nonetheless, it is what it is. Okay, so far so good. So the stock market has managed to make a nice rally and bounce and take out the highs as we expected. But the question you're probably wondering right now is, okay, but since the Federal Reserve has now recently cut rates, as we know last week the Federal Reserve made a decision to reduce rates by half a percentage point after having raised rates aggressively in the last few years and then keeping them steady. And of course, they made their decision based on data that inflation had cooled and that inflation had likely peaked a few years ago. Okay, so what does this mean for the markets? And I'm sure some of you who've seen my earlier videos from the beginning of this year, you're probably thinking, well, Alessio, you said that if the Federal Reserve begins to cut rates, then that's a negative and a bearish factor for the stock market, that the stock market could likely top, that this would be a dangerous sign for the stock market. However, guys, that is not actually what I said about the stock market. Let me play for you this clip from January of this year, and here's what I actually said about the Federal Reserve decision to cut rates.
Please do not think that we're just going to rely on the action of the Federal Reserve to make decisions. No, that is not the case. As you know, I'm a technicals guy. We don't rely just on fundamentals to make decisions. No, on the contrary, we look at technicals, we look at the charts. So we'd be looking at other important factors to determine that the markets have topped and likely starting a reversal. So we don't just rely on the action of the Federal Reserve.
Alright guys, thank you for watching that. So as you heard in that video, I said that we need to combine the Federal Reserve decision with technicals, because as we know, we don't just rely on fundamentals. So what are the charts saying to us? And also, very importantly, what is this data over here saying to us? In fact, this data, courtesy of Jason Geppert, is crucial to an understanding of what usually happens to the stock market after the Federal Reserve makes a decision to cut rates after having raised them. So what I've done is I've added some red arrows and some green arrows to this chart to explain more clearly what happened in the past to the S&P and the stock markets after the Federal Reserve made a decision to cut rates after having raised them 5 times or more. So the green arrows shows the times in the past when the stock markets went up after the Federal Reserve cut rates after having raised them, but the red arrows shows the opposite. The red arrows shows when in the past the stock market went down, fell into a downtrend and a crash after the Federal Reserve cut rates after having raised them. So some good examples are, if we just take a look, for example, 1973. So after the Federal Reserve made a decision to cut rates after having raised them 5 times or more, in 1973 you can see, the market continued to plunge further lower. In fact, the crash continued, as we can see right there. But in 1979, the opposite happened. So in 1979, there was a small dip, but it then continued to go higher. In 1980, the opposite. You can see in 1980, after the Federal Reserve decision to cut rates after having raised them, the market topped and then dropped into a significant downtrend and a crash, a bear market. But in 1987, after the Federal Reserve rate cut, the market went higher. It rallied. In 1989, as you can see here, this was actually a mixed bag. It was green and red. And the reason is the market went a bit sideways, went a bit higher, but eventually it then dropped. In 1995, though, I should say this is a huge outlier because you can see the market continued to push further higher after the Federal Reserve cut rates into the year 2000, as a matter of fact. In the year 2001, after the Federal Reserve rate cut, we can see what happened. The market then confirmed the top and then fell into a major crash in the bear market. That was a dot-com crash. In 2007, after the Federal Reserve cut rates after having raised them, we can see that formed the top in the stock market and then plunged into a major crash and indeed a downtrend in the markets. And in the year 2019, that was also inconclusive. That was a mixed bag because initially, as you can see here, the market pushed a bit further higher, but eventually in the year 2020, we had a big drop that occurred in 2020. That was the COVID crash, as we know. So the question you're probably wondering is, okay, but which path is more likely to happen now that we have a Federal Reserve rate cut this year in 2024? As you can see, this is the most recent signal, the most recent occurrence of the Federal Reserve cutting rates after having raised them 5 times or more in the past. So the question you're probably wondering is, which path, the red or the green or the mixed one, is the market going to follow in the next several months or in the next few years? Again, is it going to be the green or the red path, the bullish scenarios or the bearish red scenarios? So this is very interesting. And Jason Gephardt himself says some were positive, some were negative. All right, so we don't have a high probability as to which path or scenario the market's going to follow. But Jason says something really interesting here, which is very important to pay attention to. What Jason says is that the next 2 weeks could be crucial. All right, guys, I'm just going to write this down. Sorry about my handwriting here. So watch the next 2 weeks, according to Jason. All right, guys. And I would say also watch the next 30 days, the next month, by the end of October. What Jason says is, if in the next 2 weeks, we see more risk. If the stock market plunges significantly, and let's say it takes out support, that could be a strong sign that we're in the red scenarios, like for example, the year 2001 and the year 2007, where, for example, those markets topped. However, Jason says that if in the next 2 weeks, if instead of weakness or risk, we see, let's say, a pullback and then a continuation higher, that means we're following the green scenarios, like the years 1995 or maybe 1987, maybe 1979, something like that. All right, guys? Or maybe the mixed ones. The mixed ones are, for example, where the market went a bit higher and then eventually crashed. Okay? So the next 2 weeks are going to be extremely important, according to Jason. Watch the next 2 weeks, and I would say watch the next month. So for example, let's have a look at this chart over here. So here we can see the S&P, again, in a nice uptrend, as we can see there. We're above this trend line support. Okay, so far, there is no reason to panic. There is no reason to be concerned about the stock market, even though we have a Federal Reserve rate cut. However, if we follow Jason Gephardt's suggestion, which I think is a good one, watch the next 2 weeks or the next 30 days carefully. Because if in the next 2 weeks, the stock market were to suddenly drop, and let's say the S&P were to drop below this low that it made this September, or let's say below this trendline support. As we can see, we've got a nice trendline support here. If the S&P, again, it's an if, but if the S&P, again, in the next 2 weeks, the next 30 days, if the S&P were to drop below this trend line and below this red line here, about 5,400 here on the S&P. So if the S&P were to break both the September lows and the trendline support in the next 30 days, the next few weeks, that would be a major red flag, a major warning sign that guess what? Very likely, the market's following the red scenarios, the bearish, the dangerous scenarios, like for example, again, the year 2001 and the year 2007. In other words, if the market were to drop in the next 2 weeks and take out support, the trendline support, in the next few weeks, that means the market is saying to us this.
You can't escape death.
Yes, that you cannot escape a bear market or downtrend. However, if in the next 2 weeks, so let's say the next 30 days by the end of October, if by the end of October the stock market, let's say, is still above this trendline support and is above the supporting level here, the September lows, then that would be a good sign, a positive sign for the stock market. For example, let's say the market is a pullback, and I think a pullback is likely. So there could potentially be a pullback or retracement here in the stock market. I think it's normal. A pullback or retracement or a move back to the averages is normal and to be expected. However, as long as the stock market remains above this supporting trendline support, and as long as it stays above this September low here, and provided the market remains strong, for example, by making new highs, it continues to show strength, that would be a very positive and good sign for the stock market. In other words, if that happens, if the second scenario happens, then that means we're in the green path, the green arrow scenarios. So that means we'd be probably in a situation like 1987 or 1979, or perhaps the mixed situations like 2019, where we go a bit higher, a bit further higher, and then eventually sometime next year, we then see a big drop. By the way, guys, I do think it's quite likely that sometime in the next 6 months, or at least the next 6 to 12 months, we're going to see a top in the stock market. Based on a lot of the data I'm seeing right now, the majority of the data seems to show that the red scenarios, the red arrow scenarios, are actually less likely at the moment this year, or at least in the next few months. A lot of the data actually supporting the green or the mixed green and red situations at the moment. So at this point in time, I'm not prepared to get bearish on the stock market. Again, there could be a pullback. Again, a pullback in the stock market here is normal and to be expected. So we could see some kind of a retracement or pullback, or some kind of a pullback to the averages. That is typical after such strong rallies. However, based on what we're seeing in the data, a lot of data, and also because the stock market here still remains in a strong uptrend above this trendline support, at the moment, it seems the green scenarios, the green bullish scenarios, or the mixed green and red scenarios are probably much more likely at the moment. So for the moment, I'm remaining cautiously bullish and optimistic on the stock market, despite any pullbacks that may occur in the next few weeks. However, as I said, if the stock market, again, if the stock market were to drop below both the supporting level here, the September lows, and the trendline support, then if that occurs, we would have to change our minds and become much more bearish in the stock market here. But at the moment, guys, there is no indication of a reversal in trend, no indication of a top in the market. Again, we're above this trendline support, we're above support here, as we can see. So at the moment, guys, there are no signs of danger or extreme risk in the markets. So for the moment, it seems the trend is our friend. However, guys, as Jason said, and it's very important to remember what Jason said, watch the next 2 weeks very carefully. And I would say watch the next month, the next 30 days, because that will tell us which path the market wants to follow, the red path or the green path as shown in the previous chart. By the way, guys, let me know in the comments what you think. Which path do you think is more likely for you? Do you think the market's going to follow the green arrow scenarios or the red arrow scenarios or the mixed ones? Let me know in the comments. And by the way, guys, make sure you watch tomorrow's members video on Sunday, because in tomorrow's members video, we're going to go into much more detail on the stock market here. I'm going to show you 2 important clues and a leading indicator for the stock market, plus also my key targets for the stock market by the end of this year. Should be quite interesting, guys. And also I'm going to go into more detail on Bitcoin and gold as well in tomorrow's video as well. All right, guys, thank you very much indeed. Bye for now.